Hey you guys, it's me again, Shannon, coming at ya with another video. Hey everybody, I just wanted to make a quick video and tell you guys the difference between term life insurance and whole life insurance, because a lot of people don't understand the difference. So with term life insurance, that's the insurance that I prefer. If you prefer whole life, you do you, that's on you. But for term life insurance, people typically get like a 20 or 30 year policy. I do have a 35-year policy. Some people get less than that. They may get a 10 or 15-year policy, depending on your needs and what you want. But with a term life policy, it is just that, it's a term. So it does end depending on how long you would have the policy. So for example, with me, I have a 35-year term policy. I'm in my 40s now. So when I'm about 70 something, that policy will end. But the type of term insurance that I have is that when that 35-year term ends, it will automatically renew. You know, so I'm still alive at 70 something, it will automatically renew for me. Okay, so if you get a term policy, make sure that that's the type of policy that you have. They do have other term policies called terrible terms. That's what we call it, terrible terms. And that's when your policy actually ends, you have to go through underwriting all over again. So they would have to, you know, come and draw your blood. You would have to get a medical exam. They would have to make sure that you are still insurable. So anytime you get a policy that's $100,000 or more, as far as the benefit amount is concerned, a nurse does come to your home and, you know, draw your blood, want to make sure that you're healthy. So with that being said, you know, with a terrible term, unfortunately, you know, while you're carrying that policy, you know, if you have some type of ailment or something happens to you within that time frame and then your term ends, you know, one or two things will happen. Either that particular company will drop you and they say they can't cover you anymore because of your pre-existing condition, or your premiums will be sky high. Those are the two options that you have. So that's, you know, with a terrible term. But any term policy, after the term actually ends, your premium that you pay per month will get higher, of course, because you are older. A term policy, it doesn't have any cash, no cash value or anything like that. It just has a benefit amount, and you know, have your beneficiary. Now with a whole life policy, now the whole life policy, it has a premium, it has, of course, your beneficiary, and it has a cash value amount. Okay, so between the term and the whole life, can't forget this, between the term and the whole life policy, a term life policy is the cheaper of the two. So you know, if you're young, about 18, you know, 25, you young and you energetic and, you know, you nice and healthy, you can get a benefit amount for like $500,000. And with a term life policy, you could be paying like, what, $18 to $25 a month, you know, because you're so young. The younger you are, when you get life insurance, the cheaper your premiums will be. So that's why I stress, get a life insurance policy when you're young, when you're healthy, when nothing is going on in your body. I hear so many stories, y'all, you know, that, you know, people who don't have life insurance, or they have life insurance with their job only, they want to get a policy outside of their job, but they're stuck because they have a pre-existing condition. So they feel stuck that they have to stay at that job so they can continue their coverage, because after you leave that job, the life insurance leaves too. You don't want that. You need something that you own. So while you're healthy, while you're good, while you're strong, get life insurance, okay? But a term life policy is cheaper per month for the premium than a whole life policy. So say you get like $500,000 benefit amount, you pay, you know, like $18 to $25 versus a whole life policy with the same benefit amount of $500,000. You could be paying like $80, $100 for that policy. And it's high like that because the premium payments that you make per month with the whole life, of course, it goes to the particular policy amount. And also the premium will go toward the agent that sold you that whole life policy. And it also goes toward the cash value of that policy. So the cash value amount and the benefit amount are two different dollar amounts, and is according to the actual life insurance company that you're with. They will determine how much of your premium will go toward that cash value. So I mean, some companies, they say, okay, we will put, you know, like a 1% interest or 1.5% or 2% interest. So when you're paying toward your policy per month, which is the premium payment, a portion, just a small portion of that goes to your cash value. So that determines, the company actually determines how much of that premium payment will go toward that that cash value. Okay. Also with the whole life policy, a lot of agents try to sell you on, like, you know, it's tax deferred, you don't have to pay taxes on it. They try to sell you on, you can borrow from it. But who wants to borrow from their life insurance policy? You know, you're taking away from your beneficiary that will receive that that benefit amount upon your death. So you don't want to take from your family. You want to give to your family. You want to protect your family. So that's the whole point of having insurance, is to protect your family. So if anybody will be in a financial strain upon your death, you need to get a life insurance policy. But with a whole life, the whole life policy, unfortunately, if you do borrow from that benefit amount, you have to pay it back. Not the benefit stays the same, excuse me. So you have a policy, you know, about $500,000. The benefit will stay the same. It will not go down, it will not go up, it will stay the same. But that cash value, if you borrow from that cash value amount, you will have to pay it back, okay? And insurance companies will charge you as much as 8% interest. So that's your premium payments that's going to, a portion of your premium payments that's going to that cash value. So that's your money, and they're gonna charge you at up to 8% interest to withdraw that money out. So that's like you going to the bank, you putting your money, your hard-earned money in the bank, and you go to withdraw that money because you need it, and the bank is telling you, hey, since you're withdrawing this, you know, say it's like $500, you want to take this $500 out of your account, I'm going to charge you 8% interest. So you have to pay me back for withdrawing your own money. That's what the whole term policy does. So I'm not a fan of that, you know. So to each his own, you know, everybody is different. If You know, you have a whole life policy and you good with that, that's fine. You can say, well, you know, I'm not going to borrow from the policy. That's fine. I don't fault you on that. Definitely, by all means, don't borrow from your life insurance policy. That's not something you want to do, because if you don't pay it back, they're going to cancel your policy. So all of those premium payments that you've been making all of those years is for nothing. It's for nothing. And your beneficiary will get nothing. You know, so you don't want to do that. So stay away from borrowing from your life insurance policy. You don't want to do that. And also with the whole life insurance, that cash value, it does take about 1 to 2 years before you can accumulate some money, before you can really see any type of return on that money. So you know, for about 1 to 2 years, you paying your premiums faithfully, and you don't see anything, you know, in your cash value bucket. So after that 1 or 2 years, you know, because it's a small percentage of your premium payment is going toward that cash value, you have, you know, a couple of $1,000s within that 2 years, you know, about $8,000. So, you know, I'm not a fan of a whole life policy, to be honest with you. To me, it's a ripoff. It costs a lot. The term policy is cheaper than getting a whole life policy. I believe in buy term and invest the rest. You can have a $500,000 benefit amount with a term life policy, paying about $20, $25 a month. If you're super young, you can get it that cheap, versus a whole life policy with the same benefit amount and you paying about $100, $120. So between that premium that you pay with your term and the premium that you pay with your whole life, with that difference, you can invest that money in a mutual fund. You know, open up a mutual fund, you know, with a company that's yielding about 3-6% interest, you know. So to me, that's a win-win to me, instead of a portion of your premium payment going toward that whole life policy, only about 1 or 2% interest. That's being, you know, generated. So that's nothing. That's just like having a savings account in the bank and they just give you like 1%. Get your money out of the savings account. Okay, if you have a savings account in your bank, get it out. Open up a mutual fund. Open up a Roth IRA that's yielding at least 3 to 6%, 8%, 12%. You know, this is the type of stuff that I'm learning in my financial services company. This is the type of information that I'm learning. How to use money, what to do with it when you get it. You know, somebody in your family got to know how to use money, okay? And within my family is me, you know, is me. But, yeah, I wanted to just let you guys know the difference between the term and the cash value, which is the whole life policy. And unfortunately, with that cash value amount, your beneficiary will not see that amount of money. The only thing that they will receive upon your death is the benefit amount. They will not get that cash value amount. All of that money that was accumulated will go back to that insurance company. Okay? So upon your death, you're not going to get, your beneficiary is not going to get the benefit amount and the cash value amount. That's not going to happen. They're going to get the benefit amount only. That's all they will see. That cash value amount is going back to that insurance company. Trust me. So if you don't believe me, call your insurance company. If you have a whole life policy, call them and ask them, upon my death, what will my beneficiary receive? The cash value amount or the benefit amount. They will tell you the benefit amount. Okay? I'm not a fan of that. Point blank period. I'm not a fan of that. If that's you, you do you. But just wanted to come on here to drop a little something on you guys. Check your policies. This is the time. You in the house, you ain't doing nothing. Dust it off. Look for that policy. Some of y'all got it in a box somewhere. Look for it. Some of y'all got it in your safe. Some of you got it in your closet. Get your policies out. Look at that policy. Make sure that is something that you want to continue to pay. You know, so you don't want a terrible term life policy. You know, you don't want a terrible term like that, where after, you know, the benefit is over, after the term is over, then you would have to go through underwriting all over again. You don't want a policy like that. You need to get a term policy that will automatically renew because you're still alive. Okay? So make sure you know what you guys have. A lot of people say, well, I'm straight, I'm good, I got insurance, but you don't know what you have. You have to know what you have. You do not want your family to be in dire restraints when you pass away. You dead and gone. You don't know what your family going through, trying to get the insurance company to pay out. You know what I'm saying? So make sure you are 100% sure what you have. If what you have is what you want, you know, that's perfectly fine. But I wanted to give you guys you know, a little small lesson on term life and whole life. Okay, I hope that helped. I hope that helped some people. So if you have any questions, you know, you can ask me. You can DM me. If you don't know how to read your policy, you can definitely DM me. I would be happy to jump on Zoom. You know, we doing Zoom. I'll be happy to jump on Zoom and help you to read your policy and make sure that it's something beneficial for you and your family. Okay, make sure you're covered. Make sure you're covering your children. You want to leave an inheritance for your children, and your life insurance policy is something that you can leave for them so they can have a good and a fresh start. Okay, thank you again, guys. Love you. Bye-bye.